Hello traders, Gary Wagner here. It is Friday, finally the 24th day of February 2012, approximately 12:30 in Honolulu, 5:30 in New York. And this is the daily report for gold, our weekend review. What a strong week we saw in the market. In terms of today's finish, we do have silver nominally higher, up about 4 cents on the day, 35.36 as you can see our closing price. Gold did close off today, giving back about $6.50, very small compared to the week that we saw in the precious metals markets, closing at 1771.93. First, want to get to our gold market. And the first chart that I'm going to bring up today is going to be a daily chart. Let me put it in there for us traders. This is our daily chart. It is the cash market of gold. And I want to point out something that I found interesting when looking at the charts this morning. When we take a look at the beginning of this large rally itself, meaning the beginning of February 2011, in which we saw this market climb all the way to the record top, that record top being at about 1920. When we do a basic Fibonacci retracement, the 23% level of retracement comes out to 1776. Now, when we take a look at recent activity in the marketplace, right in here, this close of 1771.93, the one thing that you can see is that this does appear as though it could be a point of resistance in the market or a point of consolidation in the market. But until we get more information as the market reopens over the weekend, Sunday here in Honolulu, of course in Australia that will be Monday morning, we will get a greater indication of where this market might go. With the fundamental news out there, we have a push-pull scenario. We have perception that the U.S. economy is getting better. That's what brought the market down today. On the other hand, we have some saber rattling and some possible real tension and turmoil in the Middle East. And those two things are offering a push-pull scenario for the precious metals market, specifically gold. Now, traders, we're looking again at a daily chart of gold. I'm going to go ahead and blow that up a little bit because what I want to look at really is today's candlestick pattern. Realize that a candlestick pattern needs to be taken in line with many other factors and also needs confirmation. We have not gotten either. So, with that in mind, we are going to look at this pattern. And this pattern really is, again, an engulfing bearish. The last time we saw an engulfing bearish was this point here, and as you can see, we really didn't get confirmation. The market formed a base rather than moving any lower, and then moved up off of that. Again, for us to take any kind of a call in this particular scenario, you would need a confirming candle. A confirming candle is going to be on the following day because this is a daily chart. You would get a red candle with a lower low and a lower high. Now, of course, you get a different story when you look at the Heikin Ashi or Japanese average chart. Same daily chart, simply been converted. What you're seeing here is rather than a reversal signal, what you're getting is the possibility that the trend strength is beginning to weaken, but not necessarily is over. You can see that this upward channel that we have seen, we have had the first thing that we look for, which is the absence of these lower wicks. Now, why is that important? Look at it this way. The open on a Japanese average chart is based upon the midpoint of the prior trading session. So that if the market opens above the yesterday's midpoint, on a daily chart of course, you'll get this lack of tail, and that is simply what it's saying, that it has opened above the midpoint. Now, body size is also critical, and we can see within this particular chart that if anything, the body size is shrinking when we compare it to the prior couple of days. So for that reason, we can determine that the trend itself might be softening. Traders, what I've done is I've converted this into our weekly chart. Henkin first, then we'll go to standard candlesticks. But as you can see, on a weekly basis, we're still strong, we're still long. We have a sizable upside tail, so that's some concern, but we have closed above all of these previous body lengths when we look at it in that way. And lastly, we are simply looking at a weekly chart. This is now in standard candlestick format. You can see that it closed not at the high. The high, I believe, was about 85, 86, somewhere in that area, but 71, a terrific showing when you consider that this market opened in the low 1700s at the beginning of the week. Traders, we are currently looking at our daily chart. This is the spot or cash market in silver. You can see that it closed up a few cents today, but it closed right at a resistance point. And let me kind of highlight what we're looking at here. I have two basic Fibonacci sequences or retracement series. The first of which, they both start at the beginning of the rally, just like the one we looked at gold. The first of which, as you can see, takes us to our, I'll call it our record top, 49.85. Of course, 50 a couple of decades ago when the Hunt brothers took over the market, that was the real record top, and it still holds. And you can see that those retracement numbers are going to be on the left-hand side right in here. The second retracement that I did starts at the same place, but it comes to our secondary top, which I'm calling the top of B right here, and those retracement numbers are right in here. Why is that important? Well, when you consider the following, when we look at how this market traded, so it comes down, it makes its first low, comes back up, makes another low, and then makes this high here, this 44.30. And we take a look at the halfway point between the two. It takes us right to 35.35. That was our initial target of where we were looking to get out. Why? Because I felt that we might see some resistance there. Now, when we take a look at the market now, you can see that at least on a tentative basis, meaning at least for today, we have seen resistance in this area in the same way that we saw resistance in gold. Now, does that mean that the market is going to find a reversal and start trading lower from here? Absolutely not. It could. Again, it could just be consolidating before bursting higher. Realize that when this market takes off in the way that it has, these really strong uptrends, you will get points of consolidation, which in a typical market could be indicative of what you would see in a key reversal, except that in this case, the market is simply resting and forming a base before moving higher. However, we do need to note this because we have such tremendous profit in this position. Of course, we're in roughly at $28, $28.10, with the market over $7 above that at $5,000 per dollar move. That's a sizable move considering that the margin required when we entered the trade, I don't know what it is now in silver, but it was around 22 to 25,000. And considering that we're up $7 on the trade, $7 is 35,000. We've got, 120, 130% profit, 40% profit in this trade. We absolutely want to hold on to it, and we absolutely want to do the proper thing. We will take a very close look at not only gold and silver when the markets reopen on Monday in Australia, and then we will act accordingly. If needed, we'll send out special trade alerts. Have a great weekend. This has been Gary Wagner wishing you, as always, good trading. We got it this week, all right. We'll talk to you on Monday for another daily report and update. Bye-bye.